starting to approach that 200-day moving average. So this is going to be key first resistance here. Market needs to get above that if we're going to continue to make this advance. I would suspect that we're probably going to get stuck here for a little bit. Here's what you need to know before the bell this morning. Obviously, yesterday had a bit of a follow-through rally. As I said, 90% update yesterday. That's a good, healthy sign. A bit of a short squeeze here. Starting to turn the MACD buy signal up. Not there yet. So again, we're still in an oversold condition. Momentum is improving over the last couple of days, but it wasn't a really strong rally, right? We had a good, strong 2% rally on Friday. We were up about 69 basis points yesterday. Again, I would like to have seen a bit more follow through, and particularly in some of the bigger mega cap stocks. They were weak yesterday. This was more of a value rally yesterday versus Friday, where we saw a lot of the big mega caps. So again, this market's just rotating very quickly through sectors. But again, nonetheless, we're starting to approach that 200-day moving average. So this is going to be key first resistance here. Market needs to get above that if we're going to continue to make this advance. I would suspect that we're probably going to get stuck here for a little bit. Now, again, we probably may retest these lows, maybe even set a new low here before we kind of finalize the bottom here in this correction. So again, we could have a little bit more work ahead of us, so don't be surprised about that. If the market, if your portfolio has really been under a lot of pressure, use that rally yesterday. When the market opens up today, we're going to be down a little bit this morning, but likely I might see some buying come in. Use that to start kind of rebalancing some risk in your portfolio if you need to. Again, there's a real possibility we kind of get stuck here over the next few days. We'll have to wait and see how kind of markets respond. But again, we are oversold enough now. There's some fuel there. Negative sentiment is large enough as well that if we get a little bit more of a squeeze here higher, that's going to force a lot of these hedge funds and kind of computerized trading algorithms, et cetera, the CTAs, they're going to have to come in and start buying. And so if we get a little bit more of a rally, that's going to force them to start buying. And there's about $40 to $42 billion worth of buying that they'll have to do if this market gets up to the 200-day moving average, particularly if it breaks above that. That's going to bring a lot of buying into the markets just as those kind of algorithms reverse back onto a buy signal. One of the interesting things, obviously, that's kind of been going on is Bitcoin's been under a tremendous amount of pressure here as well. Again, not surprising if the market corrects, Bitcoin corrects, because of the correlation. Really, these are highly correlated assets. Bitcoin is simply just a levered proxy for stocks. So again, just all these other theses out the window. It's really just if you want to trade a levered play against stocks, you buy Bitcoin. That's been under a lot of pressure here, flirting with the 200-day moving average as well. We need to see a bit of a turn here. You're about to get a buy signal on Bitcoin. If we start to see Bitcoin get some flows come in here, that should also feed over into the NASDAQ. Again, very, very high correlation between the NASDAQ and Bitcoin as well. But again, that's been under big pressure, sitting around 82,000. So we'll have to see if that can get turned around here as of late. Lastly, as we've talked about before, gold's been doing very well here. It's been having a nice move on this kind of a risk-off trade as well. So we've seen money come out of stocks. Gold's been rallying nicely here on a buy signal, getting very, very overbought. Last time we were this overbought, had a decent correction, gave you a good buying opportunity to add it to the portfolio. But again, you're now back to very, very overbought levels. And on a weekly basis and on a monthly basis, you are in extreme overbought conditions on gold. So again, that's led to longer term consolidation periods. Doesn't mean right now, but just kind of as with any asset class, you're getting into a position where you're now more extended on the upside. So don't forget to take profits, rebalance risk. Same thing you do with anything else. Bonds are the same way. We've had a very nice rally in bonds over the last couple of days in particular. Bonds are sitting right on support right now, trying to turn up. So we previously tested that 200-day moving average for bonds on a bit of a sell signal right now, working off some of that previous overbought. So again, like we said with gold, when things get really overbought, you tend to get a little bit of a correction. That gives you a better buying opportunity. But again, we're still kind of working through that process right now on bonds. So quick run through the markets. That's what you need to know before the bell this morning.